Here are the crypto top headlines covered in this video. Ether futures open interest hits all-time high. Is the ETH bull run starting? Next, Ripple to invest in rebranded Bitwise XRP ETP. Also, big victory in Tornado Cash case as judge says OFAC exceeded authority. Welcome to Crypto Top Headlines, where there are no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Ether futures open interest hits all-time high. Is the ETH bull run starting? Ethereum futures hit new records, possibly signaling a fresh bull run in ETH. Ether surged 15% between November 20th and November 27th, flirting with the $3,500 level for the first time in 4 months. This rally coincided with a record-high Ether futures open interest, raising questions among traders about whether the elevated leverage signals excessive bullish sentiment. Aggregate open interest in Ether futures climbed 23% in the 30 days leading up to November 27th, reaching $22 billion. For context, 3 months earlier, on August 27th, Bitcoin futures open interest stood at $31.2 billion. Additionally, when Ether traded above $4,000 on May 13th, Ether futures open interest was $14 billion. Dominating this market are Binance, Bybit, and OKX, which collectively account for 60% of ETH futures demand. However, the Chicago Mercantile Exchange, or CME, is steadily increasing its footprint. Notably, CME now holds $2.5 billion in ETH futures open interest, signaling growing institutional involvement, a development often seen as a hallmark of market maturity. High demand for leverage, whether from institutional or retail investors, does not inherently indicate bullish sentiment. Derivatives markets are balanced between buyers and sellers, and they create opportunities for strategies that capitalize on various scenarios, including price declines. For example, the cash and carry strategy involves purchasing Ether in the spot or margin market while simultaneously selling the same notional amount in ETH futures. Similarly, traders can exploit rate differentials by selling longer-dated contracts, such as those expiring in March 2025, while buying nearer-term contracts like December 2024. These strategies do not reflect bullish sentiment, but significantly increase demand for Ether leverage. The 2-month ETH futures annualized premium, or basis rate, surpassed the 10% neutral threshold on November 6th and has maintained a robust 17% over the past week. This rate enables traders to earn a fixed return while fully hedging their exposure through the cash and carry strategy. However, it is notable that some market participants are accepting a 17% cost to maintain leveraged long positions, suggesting a moderate degree of bullishness. ETH liquidations could rise due to retail investors. The greatest risk in a highly leveraged environment often stems from retail traders, colloquially known as degens, who frequently use leverage of up to 20x. In such cases, a standard 5% daily price drop can wipe out the entire margin deposit, triggering liquidations. Between November 23rd and November 26th, $163 million in leveraged long ETH futures positions were forcibly liquidated. To gauge the health of Ether retail futures positions, perpetual contracts serve as a key indicator. Unlike monthly contracts, perpetuals closely mirror the ETH spot price. They employ a variable funding rate, typically ranging between 0.5% and 2.1% per month, to balance leverage between longs and shorts. Currently, the ETH perpetual futures funding rate sits near the neutral threshold at 2.1% per month. While there was a brief spike above 4% on November 25th, it was not sustained. This suggests that retail demand for leveraged longs remains muted even with a 15% weekly ETH price increase. These dynamics strengthen the argument that the rise in Ether open interest reflects institutional strategies, such as hedging or neutral positioning, rather than outright bullish sentiment. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Ripple to invest in rebranded Bitwise XRP ETP. Bitwise said that it's planning to rebrand its entire European ETP portfolio as it expands its operations in Europe. Ripple said it will invest in Bitwise's XRP exchange-traded product, or ETP, as the issuer rebrands the offering to strengthen its presence in the European market. On November 7th, Bitwise announced it would rebrand its European XRP ETP, the ETC Group Physical XRP, to the Bitwise Physical XRP ETP. Its ticker, GXRP, will remain unchanged. The move follows Bitwise's entry into the European market in August when it acquired the ETC Group, a crypto investment firm managing $1 billion in assets, including physical crypto ETPs, the Bitcoin ETP, or BTCE, Ethereum with staking, or ET32, Solana, or ESOL, MSCI, Digital Asset Select 20, or DA20, and GXRP. A physical ETP is an offering that tracks the performance of underlying assets, which are also bought and held by the product's issuer. Bitwise XRP ETP targets Europeans. The Bitwise Physical XRP ETP is designed to give European investors exposure to XRP through a physically backed product that holds the underlying asset. Bitwise co-founder and CEO Hunter Horsley said in a news release that XRP and the XRP ledger are some of the most familiar and trusted blockchains in the space. We're thrilled to be providing access for investors through an institutional quality product with the Bitwise Physical XRP ETP, or GXRP, Horsley added. Bitwise also plans to rebrand its entire European ETP portfolio as part of its efforts to expand its operations across the continent. Bitwise said it had seen significant growth in 2024, highlighting over $10 billion in total client assets. The company added that it plans to launch additional institutional-grade crypto ETPs. The company recently increased its crypto-based products. On November 12th, Bitwise launched its first Apto staking ETP. On November 26th, it filed an S1 registration for ETF tied to Bitcoin and Ether. Ripple invests in GXRP. Besides the rebrand, Bitwise also said that Ripple will invest in GXRP. Although the financial details were not disclosed, Ripple CEO Brad Garlinghouse highlighted a surge in global demand for crypto-backed investment products in 2024. With the U.S. regulatory environment for crypto finally becoming more clear, this trend is poised to accelerate, further driving demand for crypto ETPs, such as the Bitwise Physical XRP ETP, Garlinghouse said. Our next top headline, Big Victory in Tornado Cash Case as Judge Says OFAC Exceeded Authority. A U.S. appeals court said Treasury's OFAC overstepped when it sanctioned Tornado Cash's immutable smart contracts, leading to a nearly 900% surge in Torn. Tornado Cash users scored a major victory in a United States appeals court after a 3-judge panel found the Treasury's sanctions against the crypto mixer's immutable smart contracts were unlawful. In a November 26 legal opinion, a Fifth Circuit Appeals Court's 3-judge panel said the Office of Foreign Assets Control, or OFAC, exceeded its authority in sanctioning Tornado Cash's immutable smart contracts, reversing a lower court's decision and granting the platform's users a partial summary judgment. The appeals court panel said that while the Treasury has the power to take action against property, Tornado Cash's immutable smart contracts were not property under the International Emergency Economic Powers Act, or IEEPA, as they cannot be controlled or owned. We hold that Tornado Cash's immutable smart contracts, The lines of privacy enabling software code are not the property of a foreign national or entity, meaning 1. They cannot be blocked under IEEPA, and 2. OFAC overstepped its congressionally defined authority, the trio of judges wrote. The IEEPA is a United States federal law enacted in 1977, giving the President authority to regulate and prohibit certain financial sanctions. In sum, they cannot be blocked under the federal law, Bill Hughes, a lawyer at Consensus, said on X. They certainly can't be blocked as an exercise of OFAC's discretion. Still, Hughes noted that this does not mean Tornado Cash is in the clear. This does not mean that the rest of Tornado Cash is out of bounds for Treasury/OFAC too. The issue was about smart contracts with no admin key, he said. The U.S. Treasury sanctioned Tornado Cash in August 2022, alleging at the time that it had been used to launder more than $7 billion worth of crypto since its creation in 2019. Weeks later, 6 Tornado Cash users, led by Joseph Van Loon, with the support of Coinbase, sued the Treasury, arguing that its addition of 44 Tornado Cash smart contract addresses to the specifically designated nationals, or SDN, list was not in accordance with law. Crypto advocacy group Coin Center followed with its own suit in October. Almost a year later, a Texas federal court judge sided with the U.S. Treasury, ruling that Tornado Cash was an entity that may be designated per OFAC regulations. The plaintiffs appealed this decision, eventually leading to the most recent judgment on November 26th. These smart contracts must now be removed from the sanctions list, and U.S. persons will once again be allowed to use this privacy-protecting protocol, Coinbase's chief legal officer Paul Grewal wrote in a November 26th X post. Tornado Cash, or TORN, surged as much as 866% after the news broke, reaching a 2-year high of $34.98. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.